Good morning, everyone. So last class we discussed so much about money supply, how CRR, SLR, SDF, MSF, all these are interplaying. So in this class we are going to discuss next aspect, that is banking sector. Majorly we are focusing on the recent ongoing issues in the banking sector. Go ahead. Before starting this banking sector, we are going to have a just recap of whatever some important concepts we have discussed in the last class, and we will also solve few questions that is asked in the recent past, like in last 2 years from these topics, so that you can get a fair idea how much depth you should learn, how much overthinking you should do, because these concepts, if you really overthink, everything get related to everything. So but there should be a limit in attempting the paper. You should only take the direct consequences. Don't overcomplicate things. Basics, how x is related to y, that you should take. If x is related to y to something to something, then it will be impacted. That kind of thinking you should not apply in the exam. To learn all this, we will solve some questions also. Now give me this. Suppose inflation is happening in the economy. What is inflation? General rise in prices. Suppose 10% inflation हो रहा है, बहुत ज़्यादा inflation हो रहा है, 10%. Now what is its impact on CRR SLR? RBI like what supposed to do? Everything here, what you thinking, what should be your point of thought? Everything is related to money supply. इन्फ्लेशन हो रहा है, हमको क्या करना है? मनी सप्लाई को कम करना है. मनी सप्लाई को कम करना है तो ज्यादा प्राइस इधर आरबीआई में इन्वेस्ट करके रखो या ज्यादा पैसा बैंक के पास लिक्विड एसेट करके रखो, इन वो लोन मत दो, तो दिस विल बोथ विल इंक्रीज. बट ये हम इन्फ्लेशन कंट्रोल के लिए ज्यादा यूज नहीं करता. सीआरआर की मेजर फंक्शन ऑफ सीआरआर इज मनी मल्टीप्लायर. SLR is like bank runs like situation के लिए एक buffer. Okay. CRR is under which act? RBI Act. It is under RBI Act. This is under Banking Regulations Act 1949. And CRR is like a universal concept. Every country has CRR. SLR is not like that. SLR is Indian invention to give some stability to the banking system. We have introduced this SLR. Now what will happen? Repo, what is repo and MSF? Short term lending, RBI does the lending by taking collateral from the banks. That is repo. MSF means? MSF means here क्या है? RBI lends by taking collateral from the bank. If this collateral is taken from SLR quota, then it is MSF. MSF will be higher than repo rate. Now, if inflation is happening, repo rate is our major policy rate. Everything else is related to this. Now, if inflation is happening, what happened to repo rate? Repo rate, MSF, both will increase. What is reverse repo rate? Excess liquidity है, बैंक पे रखेगा, then बैंक से RBI से collateral ले लेगा, who the banks. So what will have to happen to reverse repo rate? What will happen if it increase? More interest on the liquidity, surplus liquidity. So banks will be more interested to keep that money, excess money with the RBI rather than lending. So SDF, what is SDF? That is the new tool that is introduced in recent past. What is SDF? Without collateral, bank is keeping money with the central bank, that is called SDF. Both will increase during an inflation. What is open market operations? Directly selling the government security. What will happen to that in case of inflation? Open market operation means it's a broad term. It has two components. Either RBI will sell the GSEC, government securities, or RBI will buy the government securities. What will they do if there is higher inflation? Sell the securities and take the money from the market. RBI will sell the government securities during high inflation period. All we are discussing, this is vice versa related to in deflation time or lower inflation time also. What happened to bond yield? This is confusing part. We'll discuss once again. Last class also I think we have covered it up. What happened to what is bond yield? Bond yield you understand simply as a return you get on the bond. That is bond yield. It is inversely related to bond price. Bond price increases, bond yield decreases. That concept is all clear. How it is? How it is inversely related? Bonds usually are sold at discounted rate. So 100 is the face value. Now bond will be sold at 90 rupees with a 1 year maturity. Now after 1 year you come, you will get the 100 rupees. So 10 is the bond yield. Now if you want, after 2 months you want to sell this bond. Now you are going to secondary market to sell this bond. Now if you are getting 9, you will not be able to sell it for 90 rupees. You will be able to sell it for 92 rupees. Then bond price increased and the secondary bond yield is just 8 rupees. पहले 10 था 8 हो गया. Bond yield decrease हो गया, bond price increase हो गया. If it is 94, bond yield will be 6%. Like that. So bond yield and bond price is clear. Now what happened when inflation happened? What happened to bond yield? There is inflation, say 10%. Then say bond yield is 8%. Now who in this scenario, if there is an investor sitting here, why should investor even invest in this bond yield? It is not even covering the inflation cost of this investment. So whoever who invests in this kind of market scenario, whoever invests in bond yield is at loss. So all this investment will go to some other assets, either FD assets or some other assets like real estate or gold or something other assets. Investor will be more interested in doing some other businesses. Now if nobody is interested, then what happened? This is demand will fall. If demand fall, what happened? Bond price will decrease and there will be a corresponding increase in bond yield due to this. Okay. Second perspective is, if inflation is happening, what central bank will do? Central bank will increase the interest rate. Interest rate is increased, FD option will be there for investor. FD will be more attractive than bond yield. So maybe he will invest all his money here. Again the same cycle happen. Then bond yield will adjust. So major takeaway from the discussion is interest rate prevailing in the market and bond yield will follow like proportional path. One is increasing, other is also increasing. These are all we are discussing in an ideal situation. In real time, there are a number of other factors that is going to affect bond yield and interest rate. But ideally, they all follow the same path. One is increasing, other one is also increasing. Now, in this context, give a brief idea on this. Which one? Operation twist. What was operation twist? We have a bond yield curve like this. This is bond yield and this is maturity. At lower, if you are parking your money for shorter maturity period, you will get lower interest rate. If you are parking for longer, you you will get longer interest period. Now, what is now something like pandemic happened. Operation Twist was used in India during the pandemic times. Now, if some pandemic occurs or big recession happens, then what happens? Nobody will be, consumption will fall, investment in the economy will fall. Due to all this, GDP will be at very bad state of affairs. Now government want to kickstart GDP growth. Now what government can do? What government does, the interest rate will be already low in the market. Like we have seen during the pandemic, all this repo rate was extremely reduced. Just give me a second. Repo rate and all will be at 3% ranges. Still investment is not picking up. Even though the loans are very cheap, still people are not taking the loan. So the objective of Operation Twist is to make long-term loans more cheaper, so that at least people can do some long-term investment and economy picks up. Now how these long-term loans can be made more cheaper? By manipulating the bond yield. How they are manipulating the bond yield? We already told bond yield is directly proportional to market interest rate. Now bond yield, if long-term bond yield is made to fall, market interest rate will also fall. But lower price you are getting in long maturity loans, people may take the loan. Okay. Now if you want to make this bond yield fall, what will they do? Bond price should go up. So bond should increase. So what RBI do? RBI will sit here. RBI will buy long-term bonds. And whichever bond RBI is buying, the same bond RBI will sell at short-term maturity. So if you look at the net liquidity, it is liquidity neutral. No new money is injected into the system. You are buying X number of long-term maturity bonds and selling it in the short-term market. Clear? Question mostly if Operation Twist exactly is not asked, because it's being 1 year. Last year it was best to ask, but they didn't ask. But something like this, bond yield curve can come in the paper, or bond and inflation relation can come in the paper. Something, these all money supply, how these all are related. You should have absolute clarity on these aspects. Go ahead. Now fastly, what is this? Explain me these concepts. What is quantitative easing? We take it as same thing. Conceptually it is same. Like in US it is called debenture. In UK it is called bond. Then there is some technical difference, but from exam perspective all are same. No, conceptually no difference. All these are debt instruments. Debt instruments. Otherwise, equity should be there, no? Share is the equity instrument. Say, you're asking or saying? Okay. ठीक है. Okay. But for exam perspective, don't do PhD in this. If you have interest, you can go and learn more about it. For exam and conceptually questions are coming, you take both as fairly same things. Now tell me, quantitative easing क्या है? Why you are saying USA? Quantitative easing is a general term. It can be anywhere. Central bank purchases securities on open market to achieve desired outcome. We told that open market operations. Open market operations, central bank is purchasing the securities and supplying more money, injecting more money into the economy. When quantitative easing will be done? When inflation is lower. Inflation is lower. To kick up the growth, increase the money supply, we do quantitative easing. What is the opposite of this? Quantitative tightening. Now US Fed is doing quantitative tightening and its impacts are felt throughout the world. That we will discuss in the external sector class. All those dynamics. Now what is helicopter money? Suppose you do the quantitative easing. What is your objective of doing quantitative easing? Increase the money supply. You do it, reduce the rate till where? Till still nothing is happening. Still you are not able to pick up the consumption. Still there is no investment happening in the economy. Then what you can do? The extreme option is helicopter money. Helicopter money means what? Come in a helicopter and throw away the money. Exactly, this is like synonym, but what they will do is central bank will print more money and distribute it to people. Then what will happen? At least more money should be following a number of goods. At least there should be some progress in inflation. And inflation or growth are somewhere synonymous. If inflation is there, there is a chance growth can happen. So this is an extreme step. But printing money has a very severe side effect also. What is that? Sometimes this inflation can go totally out of control. In India, printing money is allowed? Not 2003. Earlier, India printing money was being done. 1997, we completely banned this printing money system. Now, government cannot print money for this. If government is not meeting expenditure, government cannot print more money. Then what is the new mechanism called? Ways and means advances. Ways and means advances, what is the difference? What is this actually? Ways and means advances? Yes, idea is if government is not having money or facing liquidity crunch, government don't do the printing money. Ask RBI, RBI will give the government money. Now where RBI is getting the money? RBI get these government securities, they sell in the market, take the money and give to the government. But these ways and means advances, government securities will not be sold in the market. So this XYZ kitna bhi money le lo idhar se, by this means it will not create excess liquidity in the market, or liquidity and this money supply will not be too much impacted. And this is short term also, 90 days and all. So by that time government has to repay this. Okay, ways and means advances. Go ahead. Answer this question, few questions we have here. Answer this first. This is last year question, right? Most of you might have written in exam. What is answer? मिल गया? क्या आंसर है? How can you say C? C बोल रहा है, B बोल रहा है, और कुछ बोल रहा है? Two more options. Wait. Everything our thought process is money supply. Money supply is everything that is controlling inflation, that is controlling everything. If inflation is too high, what is our objective? Reduce the money supply. Reserve Bank of India likely to buy government security. Buy government securities means क्या होगा? Buying government securities from the market and giving money to the market, injecting more money to the market, money supply will increase. This statement is wrong. This is like then you got the answer. There is only one option left without one. So this is very fair statement. You cannot answer C in this. कितना भी confuse हो जाओ, point is money supply. How it impacts money supply, that is your way of thinking. If rupee is rapidly depreciating, RBI is likely to sell dollars, then rupee कब depreciate होगा? बताओ? डिप्रिशिएटिंग मीन्स व्हाट? पहले 75 $1 का प्राइस था 75, अभी $1 का प्राइस हो गया 85, देन रुपी क्या हो गया? रुपी डिप्रिशिएट हो गया, डिमांड ऑफ डॉलर इज वेरी हाई, तो आरबीआई क्या करेगा? मार्केट में ज्यादा डॉलर डालना. व्हाट दिस प्रोसेस? सेल डॉलर्स इन द मार्केट मीन्स more dollar is coming into the market. So this statement is absolutely correct. If interest rate in USA or European Union were to fall, that is likely to induce RBI to buy dollars. What will happen if interest rate in USA or European Union were to fall? Yes, yes. Like think like this. There is USA. This is what exactly happening due to now this federal tapering and this is India. Now this is investor. Now if interest rate here is falling or increasing, falling, interest rate here fall means Indian investment become more attractive. So more investors will come here, and what these investors bring? They bring dollars. Then there will be huge number of dollar in the market. So this 75 can go to 70. So what RBI should do? Take away the excess liquidity of dollar in the market. So RBI buying the dollar means it's absolutely right step to do. These are like opposite. Answer is B, 2 and 3. Go ahead. Make sure after class do whatever you want to do, but you cannot make mistakes in these questions. These are conceptual questions, these are flat questions. This should come into your hand whatever you ask. When you're sleeping you ask, you still be able to get these rights. Fact you forget, that's obviously fine, no issues. Now answer this question fast. पढ़ो पढ़ो आराम से पढ़ो. This is also a 2022 question, right? बताओ बताओ आंसर बताओ. ओके सभी का नहीं हुआ? बताओ क्या है आंसर, बताओ. कंफ्यूज है? बताओ क्या क्या कंफ्यूज है, क्या क्या ऑप्शंस में? ये हम डिस्कस किया था ना कल, इन्फ्लेशन इंडेक्स्ड बॉन्ड्स. इसमें क्या डिफरेंस है? ओनली ये है, कूपन विल बी, हाँ, coupon will be adjusted to CPI or WPI. It will be synonymous to this. Inflation index bonds, same bonds, no, technically no change. Only thing is the coupon rate that is offered, that will be integrated to CPI or WPI. CPI बढ़ रहा है, ये कूपन रेट बढ़ेगा, ज्यादा इंटरेस्ट दे देगा. कूपन कम हो रहा है, कम दे देगा. ये फेस वैल्यू पे नहीं दे रहा है, ये डिस्काउंटेड रेट पे नहीं बेच रहा है. हम ट्रेजरी बिल्स का बात कर रहा था, डिस्काउंटेड में बेच रहे हैं. ये क्या है? फेस वैल्यू पे बेचेगा. देन आफ्टर मैच्योरिटी यू विल गेट फेस वैल्यू प्लस कूपन. दिस कूपन इज सीपीआई और डब्ल्यूपीआई, दैट इज एडजस्टेड टू इन्फ्लेशन. कंसेप्चुअली इतना ही है, और बाकी सब बॉन्ड क्या सोचेगा वो ये भी करेगा. गवर्नमेंट कैन रिड्यूस द कूपन रेट ऑन इट्स बोरोइंग बाय वे ऑफ आईएबीस. रॉन्ग नहीं हो सकता, बिकॉज गवर्नमेंट सिक्योरिटीज बेच रहा है, आपको पहले फिक्स्ड कूपन देना पड़ता है, नाउ यू आर सेइंग इन्फ्लेशन दे देगा, देन गवर्नमेंट इज हैप्पी अबाउट इट. अगर इन्फ्लेशन मैनेजेबल है देन ये कूपन रेट भी बहुत मैनेजेबल हो जाएगा. एब्सोल्युटली करेक्ट. IABs provide protection to investors from uncertainty regarding inflation. That is the whole point of these bonds. Inflation protection मिलेगा आपको. Inflation से आपका पैसा erode नहीं होगा. In last case you were discussing, that is the problem. If both high inflation आ गया, then if 10% is the coupon rate, fixed coupon rate है, 12% inflation आ गया, then you are at the loss. हाँ, government is at the profit. This is otherwise this is provides protection against inflation. Absolutely correct statement. Interest received as well as capital gains are non-taxable. Very extreme statements. Government won't let these are non-taxable. Government need every word tax. It is very extreme statement, and even if you eliminate this, you got the answer also. All these cannot be true. There is only one option that is left, A. It's quite very easy question. Go ahead. Only don't get over confused with this inflation index terms and all. It's simply bonds with coupon rate that is same as inflation. Answer this question. This is last year question, right? क्या आंसर किया इसमें? सी आंसर किया. There is some confusion regarding the question. We don't have key right now. So what is it saying? A share of the household financial saving goes towards government borrowings. जाएगा क्या? क्यों? और जगह भी जा सकता है ना? That A share लिखा है. Entire नहीं लिखा है. A share लिखा है तो probably it should go. Because savings, then bank can do this by government securities and it should go. If why we are taking this right is because A share. या कोई extreme words नहीं है इसमें. अगर all this household in savings will go to government borrowings means we cannot take it right. Second, dated securities at market related rates in options form large component of internal debt. तो सही होना चाहिए. Dated securities means क्या है? Maturity will be something like 1 year to 10 year. These are like in bond market, these are the most demanded bonds. So this should form a major component of XYZ internal debt of the bank. So answer will be most probably C. Okay. Go ahead, answer this first. This is I think 2021 question. This question is because of some current affairs happening that time. Okay. बोलो क्या आंसर है? C. Okay. Governor of Reserve Bank of India is appointed by central bank. Very correct. Certain provisions in Constitution of India give central bank the right to issue directions to RBI in public interest. इसमें बहुत सारी स्टेटमेंट है, बट ओनली इश्यू इज कॉन्स्टिट्यूशन. कॉन्स्टिट्यूशन नहीं है, आरबीआई एक्ट है. एंड कॉन्स्टिट्यूशन में आरबीआई इतना ज्यादा आता भी नहीं. कॉन्स्टिट्यूशन इज इवन दो डिटेल्ड, आरबीआई प्रोविजंस नहीं लिखा है उसमें एटलीस्ट. ये रॉन्ग हो गया. गवर्नर ऑफ ऑलरेडी गॉट द आंसर. तो बोल रहा था ट्रिक यूज नहीं कर रहा है 2022 में. These are questions you should not miss. Governor of RBI draws purpose from very straightforward question, nothing to discuss. Answer is C. Now tell me what is this provision. For this I put this question. Section 7 of the RBI Act. What does it say? Section 7(1) is there. Section 7(2) is there. What does it say? Not section 7(1) says that government can consult RBI governor for some matters regarding public interest. Some XYZ matter is there. Central government or finance minister XYZ can consult RBI governor and discuss whatever it is in due to public interest. That is consult and discussion. That is section 7.1. 7.2 क्या है? Suppose RBI governor सुन नहीं रहा है, then government can even give binding orders. Binding orders means if RBI discussion is happening or RBI decision is taking, who will take the decision? RBI board will take. So if a binding order is propounded, then whatever the order is, it can circumvent the decision of RBI board. So central government has this power to do this. All these are under RBI Act. Now has this been ever invoked in India? This was invoked during the Surjit Patel time. Then it becomes big controversy. Government didn't went for this. What was the matter? He put almost 14 banks under PCA framework and all public banks went into PCA framework. Not that much important, this PCA framework. We will discuss it in the later section of this class. Now answer this first. क्या आंसर है? D. United States we already discussed in some other questions. It will be impacted. Action of Reserve Bank of India that have all the powers to do whatever it wants. Inflation exactly defines the bond yield and all this. Go ahead. All these are very direct questions if you know the basic concepts. Now we start with today's major topic, that is banking sector. Now banking means there are two types of banks. Scheduled bank and non-scheduled bank. What is the difference? Section 2 of RBI Act, if it is put inside that, then we call it as scheduled banks. Paid capital, all these criteria is there. 5 lakh, paid up capital, then XYZ, RBI will be directly influencing all this. Now what is differentiated banks? Either for its different purpose it is established. Either it is region of operation is limited. Some RRBs can work mostly in rural areas. Like local area banks can work mostly in 3 neighboring districts. So either their area of operation is limited or their what function it does is limited. How it is limited? Either to whom it may serve. Like some SFBs. SFBs, what is the point? It was unbanked and underbanked sections को serve करने के लिए SFBs लेके आया था. Service offered will be limited. Best example? Payment banks. They cannot take deposits. They couldn't take this term deposits. They can only take the other deposit. So this either the service offered is limited, either to whom the service offered is limited or their region of operation is limited. This kind of, if some limitation is there, so we are making special services for serving XYZ category, then we call it as differentiated banks. Now this is the whole comparison of 4 differentiated banks you should basically understand. Take a peek. LABs means local area banks. These are started from 1996. These are not under any special act is there. Private owners are the owners of this bank, mainly to serve agriculture and rural customers. Branches maximum in 3 districts, only 1 urban center per district. SLR, CRR, all these terms apply, but different slab may be given by this RBI. Don't go and learn that slab and talk. That will be, at least know that CRR, SLR applies to LABs also. RBI is the regulator, example is this. Okay, LABs are like getting slowly outdated. Now come to RRBs, regional rural banks. What they do? They are like statutory banks under RRB Act. What is their ownership? How is their shareholding? Oh no. Where are you getting all this? पहले से था union government was having 51%. Sorry. Union government was having 50%, state government is having 15%, and sponsored bank was having 35%. This was earlier setup. It was under this agreement, this RRBs was formed. But recently some reform happened and said that these three can combine, their earlier this was 100%, this 100% could be reduced to 51%, and the other 41% ownership could be offered to private banks or private entities. So now RRBs में private को भी role बहुत बढ़ गया, नहीं तो only one sponsor bank was responsible for XYZ. So this might improve their performance, competitiveness, services offered, all these things. Otherwise, what is their basic purpose? Rural areas with basic banking services and financial services provide karna. PSL, what is PSL? Priority sector lending. Some part of your loan should be go to agriculture, education, housing, all these categories. Now, what is a normal banks के लिए कितना है PSL? Scheduled banks के लिए 40% is the PSL. For RRBs it is 75%. CRR SLR applies, but different slabs will be there. RB is the ultimate regulator, NABARD is the immediate regulator. Some examples. Now RRB's interest rate में कुछ condition है? RRBs cannot give, RRB's interest rate should be less than what is other banks are offering in that area. Now come to new kind of banks, that is small finance banks and payment bank. What is small finance bank? इसको भी कोई act नहीं है. These are owned by private entities only. Banking services to unbanked and underbanked regions. That is the primary objective of small finance banks. Where banking penetration is poor, the major objective is to give banking to areas where banking penetration is much poor. 25% of the bank branches should be in these XYZ areas. Same as private bank, this CRR, SLR, all these applies to small finance bank also. Example, regulatory is RBI. All regulators are RBI. There is no. Okay. Yes. Even NBFCs, all these are cooperative banks, RBI is coming into this. Yes. The RBI is trying to enter that sector also. Ultimately, banking sector will come under, centralization will happen. Okay, this can offer all the services. There is no limit in whatever services SFBs can offer. Only limit is it should be more, this much of branches should be in unbanked areas. Now come to payment banks. No act, it is owned by private sector. Payment bank में क्या control है? Low business, low income households, migrant laborers, for these people you give some services, banking services specially designed for these people. Now they have no such limitation, unbanked and regional, but 25% of access point should be in rural areas. Access point means this POS machines, these ATMs where they are setting, all this should be in rural areas. That is only much lighter limitation on them. But the point is they cannot take NRI deposit, they cannot take fixed deposit. They can have, and the account can only have a maximum balance of 2 lakh. They also cannot give loan also. Then how they get money? All money they should invest in government securities or treasury bills. Example is India Post, Airtel, Paytm Bank, etc. Are you factual slide? Go ahead. Now what is digital banking units? As 75-year celebration, 75 DBUs were launched. Now DBUs are specialized branches delivering digital banking products. All digital products which you can get from a bank, that will be available in DBUs. DBUs are totally paperless, will also act as a digital financial literacy centers. Hassle-free eKYC, all this can happen. 24/7 cash withdrawal, all services will be there. Now what is some important points you should know? Who made these DBUs? They are made by scheduled commercial banks. And even though it is said digital banking units, they are physical units. Statement is there, they are only digital systems of banks. They are not only digital, they are physical units of banks. Like a special room will be there or special machine will be kept that provide all these services. But it is physically present there. It is not like services provided through online only. Don't confuse with this name. And it is provided by scheduled commercial banks. See, here it is ICICI Bank. Very old concept. Yes, yes, yes. Go ahead. Not a revolutionary concept. It is only for those people who doesn't have awareness to use these digital services. They will have people assistance and they can get better ease of access to this. Go ahead. What is neobanks? These are more interesting. These are those banks which absolutely have no physical presence, only online. Yeah, Jupiter is best. Now, yeah, this is example. Like earlier banking was brick and mortar model. Now this online banking scheme. Now we are going to 100% digital only type of banks. Now it has so many advantages. It can integrate various services. It can give specialized services to specialized people. Cost of operation is less. So many advantages here. Risk, what is risk? Abhi tak only a narrow amount of people it can serve, narrow products it can launch. Then there is this online threat is there. And if you have faced some issues, there is nowhere you can go. Otherwise, here you can go to physical branches and complain and they will process you. Here there will be nothing like that. So it will be inconvenient to many sections of the people. Now this all theory you can learn, read from these PPTs and all. Now what is most important thing to know? How banks operate. Bank get licensed as a bank from RBI. Now where is Jupiter getting its license? Or is Neo banks licensed in India? Neo banks are operating in India. Jupiter is operating in India. Other banks are operating in India. But are they getting banking license or not? If a statement is there, they are licensed under RBI Act. Is it true or false? Why? Then how they are functioning in India as banks? Jupiter functioning as a bank, right? They're providing all services, savings, everything, mutual fund, everything you will get under one banking, one digital account. Actually, neobanks are so far not recognized by RBI. You will not, any neobank will get license under the Banking Act. Now, how they are functioning is they are using license of other banks. Jupiter is using license of Axis Bank and Federal Bank. During using that license, they are offering services. So far, no banking license is offered to neobanks in India. It's illegal. Legal में कोई issue नहीं है. No, it's not like that. Where the banking services will come, Axis Bank will be providing it actually. Some savings account is there, ultimately it is with Axis Bank. Jupiter will function as intermediary role in it. Credit card, debit card issue करना है, then it will come with card of the original bank. Maybe Jupiter may be also advertised, but card original will be legally coming from the partner bank, whichever it is tie up with. Go ahead. Currently, RBI doesn't issue banking licenses for neobanks. They are operating with the license of other banks, partnered banks. Jupiter will partner with Axis Bank and this Federal Bank, I guess. So their banking services, Jupiter will twist and use and give better products in use like this. It is legal, but right now no direct license is provided to them. Maybe in future RBI may take it up. Now what is development financial institutions? Development finance institutions, DFIs. They are NBFCs, non-banking financial institution. ठीक है. Long-term infrastructure projects. Why long-term infrastructure projects is an issue in India? Like why investing in long-term or debt market of long-term projects is major issue in India?
Whatever the money which is coming back is at very low pace.
Major issue is asset liability mismatch. Indian banks, most of their money deposits where they are getting from households, from small banks, all these are short term. Now, if you take the short term money and you lend it for 25 years, 20 years, 30 years, 40 years, then where you will get this money return? If you look at the bank's cash flow diagram, there will be huge mismatch. Money will be coming here, then return will be coming after 20 years. So this is creating issues. So banks are technically incapable or finding issues to match the asset liability in investing in long-term debt financing markets. Now, what is solution to this? Bring in long-term. Who will invest for long-term? Pension fund, long-term mutual funds, yeah, insurance funds. If you take life insurance fund is you may pay throughout the life till 80 years. Pension fund maybe you have to give after 30 years. So all these funds are long-term operators who can do this investment, long-term debt financing. Now bringing these players into long-term debt financing, that is the objective of the new organization that is formed. NABFID or NABFID, National Bank for Financing Infrastructure and Development. Now this is a statutory body that you should know. Our government has passed a parliament bill to form this body. Here all this bill will be written because this is taken from PRS websites, all this. So screenshot, that's why it's a bill, it's written. It was passed then and it is all, for exam purpose, you take it as act only. Now what is the objective? Long-term infrastructure financing. DFS do not accept from people. Any statement is there, you should be very clear. All this institute does not accept fund from people. They source their fund from market, government as well as multilateral institutions. All these institutions, pension funds, all this which we are talking, from these institutions they get their fund. Authorized share capital of 1 lakh crore rupees. Shares of this BFID is divided among central government institutions, sovereign wealth funds, pension funds, insurers, all this. Okay. This all are factual information. You can even pause the video and go through it. Functions of NABFID, financial as well as developmental functions is there. Financial functions क्या होगा? Create more interest in the long-term debt market or mobilize more money into the long-term debt financing market. Developmental function, to make these projects work, long-term projects work. Capital investment increase करना country का. Source of funds, we already discussed all this. Go ahead. Support from the government will provide this much of crore to all these are very factual information. Just go through it and just make sure that if some statement is there, you should know. Basic concept is what I already told. If a statement is having wrong in this basic concept, then you should be able to identify this. Okay. Now NBFCs, what is specialty of NBFCs? They are registered under Companies Act. They provide financial services, something similar to bank. And NBFCs are also divided into NBFC D and NBFC not D. That means deposit taking and not deposit taking. Most of the NBFCs are in not deposit taking category. Now the deposits are not insured under DIGC Act. DIGC Act. What is this act? Recently a reforms was done in this act also. What is this act about? Yes, your at least 1 lakh rupees was? That was earlier. Now recently it was reformed to 5 lakh is you are insured. RBI will give XYZ money. So this RBI insurer, whichever it is, this organization. But your deposit, if it is in NBFC, there is no such insurance guarantee to it. No issue. They cannot, NBFCs cannot issue checkbook. They cannot issue debit or credit card. You have this Bajaj, Finserv. They are in NBFC. Muthoot Finance. They, if you go for their loan, they will issue you debit card, credit card, debit card at least. How they are issuing that? Similar to we discussed with Jupiter, they are partnered with another bank. Using that bank's license, using that bank's credit card or debit card, they are issuing. Not credit card, debit card. No CRR is applicable for any NBFC. Even for deposit taking, there is no CRR, but SLR is applicable for deposit taking NBFCs. They can invest in everywhere they want: share market, mutual fund, insurance, government securities, everything, everywhere they have freedom to invest wherever. It's NBFC. It's giving you a loan and all this. All this company doing financial services that is not having this banking license. NBFC can provide loan. Yes, yes, yes. There is only one concept in this gold loan you need to know. One is this LTV. What is this? Loan to value ratio. What is LTV? Suppose there is gold worth market price is 10,000 rupees. How much you will get loan for this? Maximum कितना loan दे सकता है? Suppose 8,500 loan दे सकता है. This maximum limit is decided by regulator. NBFC को कौन रेगुलेट करता है? RBI डायरेक्टली इनडायरेक्टली NABARD रेगुलेट कर रहा है. तो this maximum ratio is number is decided by regulator, and this is called this LTV, loan to value ratio. Now this also will adjust depending on times. When COVID happened, what happened? बहुत हाई लोन दे रहा था. प्रीवियसली 8,500 है, कोविड आ गया तो 9,500 कर दिया. दैट मीन्स एलटीवी रेशियो इंक्रीज किया. इसके अलावा मुथूट फाइनेंस के पीछे मत जाओ. ओनली दिस कंसेप्ट वाज देयर. देन गो इफ कोविड इस टाइम मनी लिक्विडिटी इतना कम करना है, देन इसको कम करेगा. अभी ये नीचे आ रहा है. ये गो हेड. व्हाट इज अकाउंट एग्रीगेटर? Yes, we have financial data. 10 बैंक में अकाउंट है, म्यूचुअल फंड किसी और के साथ है, या कुछ म्यूचुअल फंड में भी 3-4 लोगों के साथ अकाउंट है, एंड कुछ और सर्विसेज लेना. क्रेडिट कार्ड में भी ऑफ सम अदर बैंक वेयर यू डोंट हैव द अकाउंट. So much financial data is scattered for most of the people. So handling this will be so tough. Where it is, where the money is going, where all this. So as a solution to it, we have this account aggregators. Account aggregators, what they will do? They cannot sell your consumer data. They cannot even read your consumer data. They will just keep all your financial data at one place. Consumer to selectively share and इसको डाटा किधर से मिलेगा? ये अपना आप जाके डाटा नहीं लेगा आपको, आप इसको डाटा देना पड़ेगा. You give your XYZ data to that data, they keep it at one place. If you don't give, then they don't keep also. It's up to you to whether use it. These are also RBI regulated entities. Okay. This can be both, maybe, probably. These all data: mutual fund, insurance provider, tax invoices, cash flow, lending, wealth management, all these data can be kept under these XYZ aggregators, account aggregators. Go ahead. Simple concept, nothing. Now come to NPA. What is NPA? Non-performing assets. Like, it's being a big talk for a long time. If interest or principal is not being serviced for 90 days or more than, we call it as, categorize it as NPA. Now tell me what is brief on this NPA problem India is facing. We'll discuss. I think we have further slides for that. So we'll discuss that. Just understand these key terms at least for time being. What is standard assets? Standard asset means you are paying interest and principal, everything that is on time you are paying, then we call it as standard assets. Special mention account, that is SMA 0. SMA 0 कब बोलेगा? You defaulted the payment for 1 to 30 days. Now if you defaulted the payment to 31 to 60 days, your account will be transferred to SMA 1. Now 61 to 90 days it will be transferred to SMA 2. More than 90 days you defaulted, then it is called non-performing assets or NPA. After that, if it remains as NPA for more than 12 months, it is called substandard asset. Now if you remain as substandard asset for again more than 12 months, it is called doubtful asset. Now what is loss asset? A doubtful asset को कोई regulator आके या bank ही बोल दिया, there is very less low salvage value you can get from this. If a regulator or bank said this, then that kind of asset is called loss asset. Now two term is the loan write-off and loan waiver. It was below, it was not coming here. What is difference between loan write-off and loan waiver? क्यों बैंक को waiver नहीं कर सकता? Write-off is simply you are removing from the bank's book. That means recovery of the bank loan will still continue. Bank will still continue to recover that loan. And what is advantage of removing from the bank's book? NPA percentage decreases. Then NPA decreases. What is bank's advantage? Provisioning नहीं करना होगा. What is provisioning? Yeah, if a loan is there, you have to keep some money as security for this. And if it is turning NPA means you have to keep huge amount of money. Almost all that loan, how much pending hai, all that money should be kept as provisioning. So till it remain as NPA, all this extra money should be kept provisioned by the bank. Now if you are releasing NPAs means provision money also releases. This will improve the profitability, everything, return ratio of the bank. Loan waiver means bank will stop chasing that money, then bank will not chase that money. That is loan waiver, farm loan waiver. You don't have to repay it again. Now general trend is it was too high in 2018 time. Now we are comfortably going down. Then there is COVID, then some hype is there, but overall NPAs are coming down only. Cannot say that. System overall improvement is there. We have IBC, we have so many other new schemes has been introduced, all this. No, don't take this graph. This is only till March 2022. Like there may be like here also you can see some up and downs also in this graph also. Now tell me this. What is provisioning? We already told. What is provisioning? Amount of money that is kept aside. If NPA becomes, then provisioning increases. Now what is difference between gross and net NPA? Suppose there is a 100 rupee that is not being repaid. Now this 100 rupee is called gross NPA. Now once it turned NPA, you have kept aside 70 rupees as provisioning. Bank has kept 70 rupees as provisioning. Now even if this 100 rupee didn't came, bank still has this 70 rupees in its hand. So net loss bank will have to suffer from this is gross NPA minus provisioning. This is called net NPA. So if provisioning increases, net NPA decreases. Bank keep 100% provisioning, that means net NPA will be 0. Okay.
get by selling the collateral?
Anything can be profits of the bank.
In that case, this will reduce the NPA.
Which case you are speaking about? This one. This is net NPA will reduce, but we are more focused on gross NPA. This is like technical difference only. If we are drawing a graph, we will draw the graph for gross NPA only. Gross NPA खोलना है, कम होना है, then you have to make bigger changes. Write off करना पड़ेगा, नहीं तो total system में improvement करना पड़ेगा. Something more have to be done. Reduced. Gross minus provisioning is net NPA. High provisioning is there, net NPA will go down like this. Go ahead. Now speak something about this NPA problem. What is this twin balance sheet problem?
During post-global financial crisis, loan was given at very low cost. And lot of capacity build-up was happened. But
There is, ठीक है, during this economic boom period, that is just before this crisis happened, global financial crisis. Economic boom period, what happened? Expectations in the economy is too high. That is, economy is supposed to grow like this. Economic growth is supposed to be very high like this. Now what happened in this? Then banks क्या किया? Banks become highly over leveraged by giving loan to companies. Extreme high rate पे सबको loan दे रहा था in 2000 during the boom period, and companies was taking as much loans as they can because they were expecting there will be steady huge economic growth. Over leveraged companies, like kitna they can repay, they were taking more loans than that. Companies, how much they can repay, the interest rate, beyond that companies were taking the loans. Now this, they were expecting this growth will be something like this. Now after then came the global financial meltdown 2008, 7, 8, 9 period. Now the whole world was impacted and the growth then happened like this. Of growth level you are expecting like this, and this is happening. Then what happened? Consumption falls. Consumption falls, the ability of companies to sell products. They cannot sell products as much as they were anticipating. Now all this lead to NPA problem in 2010s. Throughout 2010s, India was suffering this NPA problem. Root cause of these were lying in the over leveraged companies and extra no control loan being given to these companies during the boom period. Now what is one way to counter this? This whole question will not come, just have a fair idea, that much only. What is one way to counter this? One idea that is circulating is, what we are doing is, this is suppose market. Yes, market will go up and it will come down. There will be a bad period and good period. Now if you are over leveraging or giving so much loan here, that is what we are doing now. You are giving so much loan during the boom period, then during the deflation or recession period, you are not able to give any loans. Now instead of doing this, you follow counter cyclical policy. What is advantage of counter cyclical fiscal policy? This is more related to fiscal aspects, but you can connect some aspect of this with twin balance sheet problem. What is advantage of this? Yeah, here you are not spending too much, but economy is growing. That means government has huge buffer. When things go wrong, government can come up and spend this XYZ amount. That buffer is there. Then fiscal deficit, even a pandemic came or a very big thing happened, fiscal deficit, government has so much of buffer, so they can keep it in limits. Now what is twin balance sheet problem? One, corporates balances is bad. Second, due to this they are not paying the banks and balance sheet of the banks are also equally affected. There is twin balance sheet problem. Now what is twin deficit problem? That is India currently facing. India is facing twin deficit problem. That is current account deficit. At the same time, we have huge fiscal account deficit. What is current account deficit? Export minus import. What is fiscal deficit? Government का expenditure minus revenue. Expenditure, it will be technically expenditure minus loan. This loan is, we call it a borrowing, is what we call it as fiscal deficit. So these issues are India is facing. This is twin deficit problem. On the other hand, twin balance sheet problem is more or less related with NPA issues. Go ahead. What is? We'll take a break here. After 5 minutes, we will continue NIRCL and IRDCL probably in the next class. Okay, that's all for now. Thank you.